Hi guys, welcome back to another video on the channel. I'm making this video basically just to show you the potential trades that were available today based off of the system that we run. So yeah, I'm just going to go ahead and start. Aussie dollar had effectively a setup that I took which played out in my favor. Effectively during 4 a.m. New York time is the true day open, so we start effectively the market analysis based off of the full midnight open New York. So that's the midnight open level. You can see the start of London, which is 8 a.m. GMT. You've got to move up, basically effectively taking out the sell or the buy side up here. Then moving to the downside. So the break of the structure created an order block which I mark out here. So effectively last candle before the opposite candle to the market move, and then obviously you've got your fair value gap in here which I took. So this gave me an opportunity short which I took effectively around here, and my initial targets were, if I use a Fibonacci retracement tool, I was effectively targeting the 1618 retracement for at least a 1 to 2 risk to reward based off of this, putting my stuff about a 5% higher than the previous swing high. The market did, I held on to this trade up until here. Market just was very shy in taking me out, but then as it retraced, I sort of just exited at a 1-to-1 on this 27 level here, so ended up collecting at least a 1-to-1 risk to reward on that. That was the trade that played out. On Swissy, we didn't really have anything on Swissy. You had a move lower, and then once London, as you start into the move higher, you've got obviously this big move push higher here. There wasn't really anything to take on the Swissy. On the EURGBP, I had a limit set for when London open, and we broke this level down towards the downside, breaking this market structure here. I looked at, first of all, a 61.8% retracement, golden pocket, and then obviously you've got your order block here marked out, and you've got a breaker block. You've got a fair value gap just in here, within this level here. So the funny thing is that the market, I had my limit set at this level here, but once the market broke down below this initial push lower, I consider this trade invalid, because effectively what we've done is taken out these previous lows here, which would have been an opportunity for a target if the market held on. However, you can see that the market does respect the 27% Fibonacci retracement level here. So if you leave your entry or your limits on for the rest of the day, you put your stop at 110% level of that move, and you put your target down here. That's a 2.71 risk to reward if you leave this there. I chose not to, because I think once this move is done, I would like the market to continue lower. I wouldn't want it to retrace all the way back up to my entry point. I think that is not basically a good behavior to do. So that was that. The euro also presented an opportunity. However, if we're starting the analysis from here, then I don't consider this move valid, but it did occur. There was a 70% Fibonacci retracement up at these highs. The market rallied at London Open into a 70% fib and did play out over the course of the day. However, we obviously start our analysis off from basically the London Open. So the midnight open New York. So if we start off down here, you can see breaking market structure up here, and you can see a return to the order block in here, right? And if I take this down to sort of 5-minute time frame, you can see that this previous order block here was respected. We'll just make it bigger. So this previous order block was respected here, and we did see a push away from it. Once it came in, or sort of touched the 786 Fibonacci retracement level, didn't get past the stops and was wanting to move higher. Didn't get above this overall push higher. So if you had your, stop loss, if you had a 70% retracement here and you had your stop there, you could have maybe taken out a 1 to 1.5. Ideally, you want at least a 27% retracement, which is all the way up here. But most definitely, you should have been at least break even on this trade. I'm speaking to myself now. And then obviously, once it's broken this low here, our sentiment changes. So now you get a bullish sentiment. There is the opportunity for this move to occur. Didn't give you a 60% retracement, and then obviously there is the opportunity for this move to occur, which did give you a 61% retracement. So you can see that there is opportunities throughout the day to take entries depending on how the market is moving. So in here you've got effectively this OB, this order block level here. The market retraces into the 70% level just in here, and then it's touched the 27%. So if you were trying to take the short, you're looking at a stop above there and a move back down into the 27, which is a nice 1 to 2.5 risk to reward. Effectively, every single trade you take, if you target the 27% level with a stop above the previous swing high, that should be an easy target for you to take trades, especially since that's the level at which there's a previous swing low here. But obviously, we start off on the 15-minute time frame, move down to the 5, but we never go lower than the 5, especially not for this sort of strategy as well. GBP USD, again, same sort of thing. Had a bullish move to the high side today. You had an opportunity. This is a swing low here. Market got taken on the swing low. Right, this is a break of market structure here in the 15. Once London 8 AM opened up, and you've got basically from swing low to swing high, you've got a 61.8% Fibonacci retracement, which lines up with this bearish bullish order block here. If I move down a bit lower, you can see market came back into it and then moved higher. At this point here, you're looking at basically a 1-to-1 risk to reward. Market did not go higher than this, so 1-to-1 risk to reward, it gave it to you as a minimum. 127 would have been just above the highs, which is a 1 to 2 risk to reward based on the on how the market retraced. But once it's broken lower, and it's broke this low here, and then it breaks this low here, you can use an opportunity down in the lower time frames, especially after 130. This would have been a nice move to try and target the downside. I mean, this retracement here, it still hasn't obviously played out because it's not got down to that level. But again, it's just a nice little reminder that these sort of retracement trades do work out. Optimum trading trades do work out. They've got such a high chance of working out. Dollar yen set up from midnight open into the London open, had a 70%. This would have been a loser. But critically, when I had my level set, I was looking at this order block with this fair value gap in here, right? And because it made the move lower, I decided to take my limit off. So when it eventually broke above here, this counts as a break of market structure. This counts as a shift in market structure for me anyway, because it failed to break lower, then it broke higher. Right, so in my opinion, this is a shift in market structure. Market eventually did go higher. There's a second opportunity here with a retracement into this OB on the 5-minute, right, before market pushes higher. So it really is dependent on sort of how you see the markets. But in my opinion, this is because the market tried to break lower, and then on the advent of 1230, it's made this move higher and is now proceeding higher. So yeah. BTC USD, classic